Welcome back, everybody, for my portfolio update for November of 2025. And it was a painful month for my portfolio, with many of my holdings down big, even though the indexes recovered a lot of the losses that they had earlier in the month. And look, I've been saying that if certain stocks around the tech and AI trade end up getting crushed, then my portfolio is going to suffer. And that's exactly what we saw in November, making my trim at the end of October actually look like a pretty good decision, even though the other 80% of my portfolio just went down a lot this month. But where did I end up for November? Let's find out. Now, we're back in Snowball Analytics, and as of November 30th, my account is currently at $473,145 and some change. So if we take a look at the actual breakdown, I've adjusted this to see how we did for November only, and we see that my account value was down a whopping $30,896 for the month in terms of dollar value. And if we take a look at performance only, you'll see that the performance was down the exact same $30,896. And that's because I ended up not making my $800 monthly contribution this month because I'd kind of trimmed at the end of October and I had all this cash in the account, and honestly, I just didn't really feel like doing it. And if we just take a look at the breakdown of the performance, we see that it was all capital gains, no realized P&L, no dividends, just my stocks going down in value for the month. And as you see on the chart for November, we just kept kind of going down with a slight bump up towards the end of the month to get up above the minus 10% that we were at a certain point. But now let's see how it did against the S&P 500 and the Nasdaq 100. Now for the month, my portfolio was down over 6%, with the S&P 500 up 0.19%, again accounting for the timing of my own buys and sells, with the Nasdaq down 1.56%. So we got crushed by both the S&P and the Nasdaq this month, down over 6 percentage points to the S&P 500 and about 4.5 percentage points or so to the Nasdaq 100. Now, if we take a look at where we stand year to date, we see that my portfolio is up 32.8%. The S&P 500 is now up 17.68%, and the Nasdaq up 21.42%. Again, these are based on the timing of my own buys and sells. So even with the big down month, we're still outpacing the S&P and the Nasdaq pretty handily for the year going into the last month. And if we take a look at the performance of my portfolio since I started it on December 8th, 2022, we see that my portfolio is up just under 90% now, with the S&P 500 being up just under 71% and the Nasdaq up just under 108%. So since inception, we're outpacing the S&P by over 20 percentage points, but still trailing the Nasdaq by about 18 percentage points now since inception, and losing a bit of ground over the past month. But overall, we're still performing well. If you look at the big picture, we just took a pretty big hit over the past 30 days or so. Now, I started showing my time-weighted returns last month for those of you that are into that. And if we take a look, we see that overall, it's 107.85% compared to the S&P 500's 80.63% and the Nasdaq 100's 122.29%. So a little better relative performance for my portfolio if you use time-weighted. But again, there's pros and cons to each approach. Now, if we take a look at what I bought and sold for the month, again, there was basically nothing. And look, for me, this was pretty simple. At the end of October, I said that I thought things started to look a little bit extended. I trimmed, pretty much across the board in my portfolio, and I'm just being a little bit more patient in terms of when I'm going to try to get back into some of these names or maybe new names. It's just, I don't want to rush too far into it. I want to see what the market does a little bit, and that may work out well or it may not. We'll just have to see. But that's why you see that I didn't really do anything in this portfolio for November. Now, one thing that has changed is I told you guys last month that I was going to take about $50,000 and move it from my long-term portfolio to my trading account. And I did that. And mostly what I'm using that for is just having extra cash in that account to use for margin requirements, so that if I want to trade more contracts, I want to do more trading overall, then I can do that without kind of hitting the limits on my account. But currently, I'm just kind of showing it as $50,000 in cash for my long-term portfolio still, which is a little misleading since I'm not planning to use it to buy any shares. I just plan to keep it in my trading account. So I'm not really sure how I'm going to show that going forward, because I have been doing a lot of trading. And that's what I was doing for most of November as I continue to experiment. Now, I showed you in my pins video that my long dated calls for pins and Intel hadn't really been performing well up to this point, but mostly what I've been doing is actually credit spreads. So credit call spreads, credit put spreads. And at some point I may do a video about what those are and what I'm doing, but that's really been the bulk of my trading. And one thing that I noticed is that there's not really an easy way to show my performance related to that, since everything is kind of lumped together in that account. So for example, you can see that my 1 month performance in my trading account is 1.10%, but the issue is that It also includes my long-dated call positions, which are obviously down, and that's fine, but those trades are basically still in progress until I decide to sell. So there's no good way to break those out to see how my performance is on my actual closed trades, at least not that I've found. So if any of you have Fidelity and you know how to do that, or you have a good way that works for you, I would love to know what it is, because I actually think this is the one area where I think Fidelity maybe isn't quite as good as Schwab, because back when I was at Schwab, they had the transaction analyzer thing, and that was actually really great at being able to see the performance of specific trades. But anyway, I started keeping a spreadsheet for myself just so that I could see how these specific trades were actually performing. And as you can see, for November, I made a little over $5,500 on closed trades, and that's on a $100,000 plus account or so. So with 20 total trades for the month, where 16 of them were wins, which equals a 75% win rate, with an average win of about $580 and an average loss of about $930. But even that doesn't really tell the whole story, because most of those losses are related to one trade, which actually didn't end up being a negative at all. I just had to roll it into the next week, and by rolling it, I booked the loss in the current week, and then I gained way more than that in the next week. So there's a lot of nuance here, and for me, I'm just kind of struggling a little bit on how to show it. But even then, overall, that's a 5% monthly gain in a month where the S&P was basically flat and the Nasdaq was down. And so to me, that's pretty good performance to get started. Not to mention that one thing that I really noticed in that experiment is that I left a lot of money on the table with these trades. I mean, I was extra conservative and trying to get out of trades because I'm just kind of ramping up. And like I said, I'm experimenting. But 19 of my 20 trades would have actually expired worthless in my favor had I just kind of let them go, right? So what it tells me is that at least I'm making some decent progress in terms of how I'm setting up my trades, the thought process I have behind them. And hopefully, as we kind of continue on, I'll get a little bit better at letting those go a little bit longer to book more profit. So we'll see what happens in December, but I'm definitely aiming for at least 5% plus in terms of overall return again. But the issue that I'm having with this as it relates to these videos is I don't really know how I'm going to show this in relation to my long-term portfolio, because it gets complicated, right? Like right now, I'm just showing it as $50,000 cash in my long-term portfolio, but it's technically in my trading account. So that doesn't really make sense. So that might be something where I literally may just take 50 grand out of my long-term portfolio number and just call it a day and just move on without it. But we'll see. Maybe as we start 2026, I'll make that change. So with that said, let's actually get back to my long-term portfolio and take a look at my updated portfolio allocation. Now, cash right now obviously is in the top spot at 21.69%, which we just talked about. That's already moved to my trading account for the most part. And in terms of actual holdings, though, Amazon is new in the top spot at 12.42% since Nvidia had a big down month. Now, NVIDIA is still next at 12.05%. Taiwan Semi is third at 9.92%. Meta is next at 8.08%. Google is now fifth at 7.38%, and Cloudflare, down big this month, is now at 7.36%. Visa's next at 6.36%, Coinbase at 5.19%, Palantir at 4.98%, and lastly, Snowflake at 4.57%. Now, if we take a look at what holdings performed the best over the past month, Google was by far the best performer of the month and my only positive holding for the month, which is just insane at 13.87%. And yes, I said my only positive holding for the month, which means the other 9 holdings are all negative. And that starts with Meta being slightly down or close to flat, but then Visa down 1.85%, Taiwan Semi down 2.97%, Amazon down 4.5%, Snow down over 8.5%, Nvidia down over 12.5%, Palantir down almost 16%, Coinbase down over 20.5% on the month, and then lastly, Cloudflare down almost 21% on the month. So you can obviously see why my portfolio got crushed this month. I mean, one, I had almost all losers in my portfolio for the month, and a handful of them were pretty big. Now, if we take a look at which holdings have performed the best overall, and remember, this is just price return since I take my dividends in cash to reinvest manually, there is a new number one performer, and it's Google at 110%. Now, Just for clarity, I want to say that what I'm showing here is just the capital gain number, which means it takes my current cost basis and the current price, and it basically does a calculation to see what the percentage return is. What it doesn't take into account is any of the previous kind of realized sales and profits that I've gotten. Because if you do that, then NVIDIA and Cloudflare are still kind of in the top because I've booked a lot of gains on those earlier in the year. But still, that's just for clarity. Google's been on an amazing run, and clearly it's shown up in the capital gain number. Now, after Google, NVIDIA's next at 105%, Cloudflare's at 93.75%, Taiwan Semi up just under 53%, Visa up above 36%, Snowflake up over 34%, Amazon up just under 34%, Meta up just over 30%, and Coinbase down big but still up 14.5%. And then lastly, Palantir, after a big down month, still up over 11%. And I think the main thing that I kind of took away from this is that, look, I mean, some of these had just catastrophic months. I mean, Cloudflare being down almost 21% is crazy. Coinbase down over 20% is crazy. I mean, anytime you see those type of numbers in any given month, it's pretty insane. But I do think it's important in these situations to still take a step back. I mean, you have something like Coinbase that was down so much, but yet it's still positive on the year. Palantir still positive on the year, even though, I bought it at what people thought were outrageous valuations. And obviously, time will tell if that continues to stay in the positive. But, that's why we shouldn't overreact to any given month. These things happen. You have to take the big down months with the big up months if you have stocks that do that. Now, if we take a look at my investment income, specifically for the next 12 months, we see that my annual dividends and interest are at $1,071.39, which is up from the $1,007.14 that I had in October. Now, in terms of overall dividend yield for my portfolio, it's now at 0.29%. And in terms of what actual dividends I received this month, well, there were none in November, so that makes that pretty easy. All right, so let's take a look ahead to next month and what holdings I think I'm going to add to going forward. Now, in terms of my current allocation, the only one that I really want a higher allocation to right now is still Palantir, which hasn't really changed for the last 4 to 5 months. But I will say, since the market and a few specific names have come down quite a bit over the past month, it has changed my approach a little bit, or what I think I'm going to be adding next, just because I think there are some that are just really attractive value that I don't necessarily want to miss. And that kind of leads into the next part of the ones that I think are good value right now. I think the obvious ones are NVIDIA, Taiwan Semi, and Meta, and I think it's more likely than not that I'll add back into one of those names depending on what the market does here. So my first thoughts for November are, look, this is the first month in a long time where my performance significantly underperformed like the Nasdaq and the S&P 500, right? And look, it's bound to happen because I've had months where I significantly outperformed, right? But one month isn't going to make me question my strategy or what I'm doing or the companies that I'm holding. Obviously, we'll see what the market does, but overall, our performance for the year has been exceptionally good. And barring something catastrophic having in December, we should end the year with, pretty good outperformance compared to the indexes. And that's basically all you can ask for. All right. Now, if I recap what happened this month, portfolio was down over 6% and we got crushed by both the S&P 500 and the Nasdaq, but we are still crushing the S&P and Nasdaq year to date and the S&P since inception. Now, I had basically no activity this month in my long-term portfolio, just kind of waiting to see what the market does. So how did you all do for November? Let me know down in the comments. Now, if you want more detail on why I'm actually holding off and just wanting to see what the market does and the technical factors that I'm looking at, you can watch my video where I go through it by clicking this right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.